All right, I'm going to go ahead and get started. And what I'm going to do is just kind of preface here, anything I talk about today is not financial advice. Please only buy and sell stocks based on your own personal investment goals. And today we're going to look at a few stocks. I'm going to add them to a new watch list in Tykr, and then we're going to rank them at the end based on what I would say strongest to weakest as a long-term buy and hold. So I know a lot of people are very interested in Palantir, and we're going to jump right into that. So let me go ahead. I'm going to share my screen. Here we go. You can see here my dashboard. I'm not going to spend too much time here, but you can see Palantir. Look at that last 24 hours. A lot of people looking at this stock to see what's going on. So let's talk about a few things that are happening. We can see there's this sharp decline over the last week or so. 126, it looks like was about the high. Then it got down to, yeah, about 89. So what's going on here? With this stock, a few things are happening, and I'll keep a short answer here. Don't be too alarmed. Number one is Alex Karp, the CEO, is selling shares, and we'll talk about leaders in a corporation that are selling shares. It's a thing that happens all the time, and I'll give you an example, personal experience that I ran into that really kind of eases attention a little bit. So when people are selling shares, don't freak out. It's like it doesn't mean right off the bat something's wrong with the company. So that's number one. And then number two is the Pentagon has talked about cutting costs. And that means that a lot of businesses serving the government or different branches of the military could see budget cuts. Now, I did look into what analysts are saying. It doesn't look like Palantir is going to be facing the budget cuts. What I typically do is when a stock goes down like this, the two things, and this is super important, whenever a stock goes down, I'm looking for two things right at the top. We'll talk about the third here, which you can look at. I use for Tykr, you get it in the financials. But number one, were there any legal issues? Right. So we know there's no legal issues with Palantir. So that's number one. Number two, did they lose customers? You're going to see that right away hit the news. Their biggest customer, I mean, these serve large corporations all over the globe. They serve branches of the military, including the Army and the Navy. We did not see anything like that. So these are good signs. We're not seeing anything there regarding legal issues or losing customers. So I see this and I'm like, okay, we're checking all the boxes. We're still looking good. We might have ourselves a stockpiling opportunity if you guys are not familiar with that. That's the strategy, and I give Phil Town credit on this. He really teaches us, and I'll actually show you who he is real quick. He's got a few good books. And he really emphasizes the power of stockpiling, making sure you're set aside some capital when those stocks in Tykr, and this is a big reason why I love using Tykr, is you have on sale stocks that have a high score, high margin of safety, and when they pull down and there's no legal issues and there's no losing customers, that's a really good sign. Now, the third thing I check is, did we see EPS decrease, quarterly EPS? This did not impact because the latest news here, we're going to swing back to and really talk about Palantir on the selling of shares, but this did not cause an issue. In fact, the going from 0.06 to 0.03 did not cause the stock to fall back. That was a few weeks ago. Um, so I look at the financials. Sometimes you'll see stocks miss, or you could say they see a lower EPS that can cause a stock to decrease. And then they miss an earnings estimate. These estimates here, this is a really important tab here. EPS estimates, EPS reported. You want to make sure you're looking at stocks that are beating those estimates. And the estimates are really you could call that an average of analysts on Wall Street, and you like stocks that are beating those estimates. And if you pay close attention here, this is really a good sign for Palantir. It was since 2023, they consistently are beating those estimates. So that's a really good sign. And then going back here to the EPS, you can see this. It doesn't look huge, but this is great. We're moving in the right direction, slowly increasing the profitability of the company. That's awesome. So From my perspective, there are no red flags with the stock. We're not losing customers. There's no legal issues. Um, and there's not anything to be alarmed with regarding the Pentagon at this point getting budget cuts. So that's great. Now let's talk about the selling of shares. So here's a quick story for you. When I was working at a public company, there was a director that sold shares, and a few people offline, including myself, asked them after it's public information, "Hey, you sold shares. What's up with that? What's going on with the company? Should we know something?" The response was, "Well, our daughter is going to college and we wanted to sell some shares to pay for school." And then my wife was like, "You know what? Could we sell a few more shares to just pay off the house?" So it had nothing to do with the stock. It had everything to do with their own personal circumstances. And I tell you what, I hear about stories like this more and more. People are not selling shares in companies because of something going wrong. It's usually because it's something personal in their life. This happens all the time. So keep that in mind. Now, when it comes to Alex, he's worked on Palantir for over 20 years. Time to take a payday. Typically, the point to do it is, and I agree with him on this point, is you want to make sure the company is really in a good spot financially. Because I do see you guys, this is a key thing to drill into, is a company goes public and leaders will take a big payday at that point. You see this with a lot of penny stocks, and it's not fraudulent, but it's almost flirting with it. I do not like that. I like to see, let's maintain high conviction, keep building the stock, making sure it's seeing an increase of revenue like this, increase in profits, net income, and the financials are really solid, then consider selling shares. And he's not going to sell it all in one go because you can't really do that. You got to talk to HR, compliance in the company, and then you can start selling shares over duration of time. So that Wall Street was freaking out that Alex is selling shares. I'm like, guys, we've been here before with other businesses. There's nothing to be alarmed with. So to zoom out for a second, the two reasons again that Wall Street was really seeing the big sell-off, and let's go to that 1 month here, are because of the shares being sold off by Alex and of course budget cuts with the Pentagon. Now with Palantir, I want to bring over their website real quick. We're going to talk about some of their products and services here. They really have four key products in the platform. You've got AIP, Artificial Intelligence Platform, really clever name for artificial intelligence. They've got Foundry, which serves businesses. You have Gotham that serves government organizations or the military. And then you have Apollo, which really helps with deploying software more efficiently. Now, AIP, this is pretty cool. I did a little homework on this. You can plug it into a business and it will help analyze the data sets within your business. And it's kind of like another bolt-on tool they've added to their umbrella. I do not see any risks. Of course, there's no 100% guarantee here, but any risks on AIP. Businesses like cutting spending on that. Same thing with Foundry, same thing with Gotham, and same thing with Apollo. I see a definite need for the public and private sectors on all. With Foundry, to touch on this one real quick, because I worked for a few public companies and other large organizations. When you have a lot of employees in a company, we're talking tens of thousands of employees, you have a lot of noise, a lot of data, and a lot of repeated steps, a lot of efficiencies. Well, how do we analyze the data, become better at marketing, sales, and operations? Well, that's just one thing of many things that Palantir is good at. So when you're applying the same thing to the government, I don't see the Pentagon or anybody cutting spending on Palantir. In fact, I would see the opposite. If they want to become more efficient, because we're hearing about what Elon Musk is doing, is trying to drive efficiency, I could see Palantir actually being used to identify areas where there could be improvements. Great tool for that. No guarantee here, but that's what I would do if I were in leadership. So that's a quick summary of Palantir. I still hold the stock, just full transparency. And I'm a long-term shareholder. I'm not freaking out. I saw the news. I saw the big decrease here. I am not losing sleep on this. So, of course, buy, sell stocks based on your own personal goals, but just know I'm not freaking out on this one. I'm going to pause there on Palantir. Do you guys have any questions on Palantir before we jump to a request from a customer offline? I always like to start with a request from a customer, and then we jump into your guys' requests. All right. Recording the call, Andre? Absolutely. We are recording as we speak. I'll upload this to YouTube. All right, I'm looking at the chat. I'm also looking at the Q&A tab. Feel free to use either or. All right, I see a hand raised. Andre, feel free to use the chat or the Q&A. All right, when would you sell Palantir? So, real quick tip here for those that are new to Tykr, you should be getting emails with tips. The onboarding is key. And you could take your time. You could read through this in one go. You can also read those emails. But one of these, or actually two of these articles, do talk about when to buy and when to sell. This is really critical. So let's touch on these real quick. This will be really good for you, Andre, and other uh, new users to the platform. When to buy is a two-step process. When a stock is on sale, and the 4M is 80 or higher. Now, the 4M on Palantir, it's not 80, but it's pretty close. This is really a rigorous tool. I'm not going to go through it right now in detail, but you can see the 4Ms here on my screen. Margin of safety is the math part. That's what a lot of analysts on Wall Street start and stop with. You don't want to stop there. You have to also look at the business. Thank you, Warren Buffett, for that tip. We'll look at the meaning of the business. How scalable are the revenue streams? That's really important. In my case, I like businesses with multiple revenue streams like Palantir and highly scalable revenue streams. What that means is you can increase your revenues a lot, not have to hire a whole lot of people. People in a business are typically put into the category of liabilities. You are liable to pay their salaries, their payroll. All right, then we've got the moat. How does a business compare to other businesses in the same sector and industry? And then you have the management. This is a track record of the C-suite and the CEO. Putting everything together could take you hours, if not days of research. We reduce it to seconds with OpenAI. You can literally log in here and see the scores. So touching back on when to buy, it's when those two criteria are met, on sale, and then 4M is 80 or higher. Now let's go back to when to sell. It's a three-step process. When that summary changes to watch or overpriced, when the 4M drops to 59 or lower, that's when you know you've got a really weak business. And then this third is key. This is when you are profitable. This point here, thank you, Warren Buffett, as well. And Phil Town really hammers on this, which is rule one, don't lose money. Rule two, don't forget rule one. And in my case, I decided years and years ago, do not sell for a loss. I hold, I wait for the market to lift it back up. The guys at Motley Fool Money have a really good line. They phrase it as a rising tide lifts all ships. So the market goes up and down like waves in the ocean. Be patient. Let the market lift up those stocks till you're profitable, and then you can sell it and move into something that's a more effective stock for the long term. So, Andre, there you go. That's when you buy and sell. Yeah, you mentioned when it goes to overpriced. So in my case, Palantir, it's not hitting the criteria to sell. It's still on sale. I'm still a long-term shareholder in this one. And as I mentioned earlier, I'm not seeing any legal issues and they're not losing customers. That's a big thing is a lot of people are looking at stocks as stocks. Try to train yourself to look at stocks as businesses. What do they do? How do they make money? Who are their customers? Did they gain new customers? Sometimes you'll see that in quarterly reports. If they lose customers, that can hit the news as well, especially if there's a big customer that's lost. That can be a little alarming. So in my case, this big drop, look at that spike. Let's go to the 1 year. That can be a very exciting time. That's stockpiling for you. So, Andre, you mentioned Tesla. Yeah, we can touch on Tesla in a moment. I'd like um, to AppLovin. And then Jeff asked a question about protecting against downside. So, actually, Jeff, let me hit your point here real quick. What are the best practices of protecting against downside in general? I've never set any stop loss triggers on my brokerage since I want to accept most of the volatility since I'm a long-term investor. That's a great strategy, Jeff. So here's a good case study for myself on using stop losses. So when I was first getting into investing or creating Tykr Excel sheet between 2015, 16, really up through 19, I was also researching technical analysis and kind of trying to use charts and graphs along with fundamental analysis. And what that does is it also teaches you how to do stop losses. And there's a circumstance with Facebook where the fundamentals or ticker was telling me buy more, but the technical analysis was time to sell. So I actually hit a stop loss, it sold, and then the very next day the stock took off like a rocket. And the technical analysis kept saying, yep, still a sell, still a sell. Fundamental analysis kept saying, still a buy, still a buy. And this stock was taking off like a rocket. And I waited like a week and it never turned around and went down and I never got back into Facebook. However, or Meta nowadays, it goes by Meta, but I missed out on huge gains. And I did it once more, and then I turned against any stop losses and any technical analysis. The other stock was Lululemon. Same situation. Fundamental analysis, everything is looking great with the numbers, the revenue, net income, EPS, free cash, uh, awesome stock at the time at least. But technical analysis was like, oh, time to sell. I hit a stop loss, sold. I eventually went back into it within a week, but it's the same thing. It started taking off like a rocket. TA is telling me to sell. Fundamentals are telling me to buy. And I got back in. I made some money. Eventually got back out when I think it flipped to a watch or overpriced in the Excel sheet when it was around. And I told myself, never again. I'm never doing another stop loss. I'm a long-term investor. Technical analysis, done. And my returns thereafter have significantly gone up and consistently gone up because I've turned away from technical analysis. Now, some people like to look at charts and graphs to time entry points. You might be able to squeeze a little more juice out of that orange, as I phrase it, but is it really worth it? At the end of the day, if you're holding stocks for years, it could be a few extra bucks in your pocket, but does it really matter? The answer, in my opinion, is no. Now, Warren Buffett has talked about a good quote. One of my favorites from him is if you're not willing to hold a stock for 10 years, don't even think about holding it for 10 minutes. What that means is, and he's emphasized this as well, he could really literally buy a stock, the market could shut down, but as long as the business remains in business, he's fine. He'll go read newspapers, go on vacation, do whatever he wants to do, not worry about it, and then look at it 10 years later. And I really like that because it's training the mentality of don't try to time the market, focus on buying good businesses. And then in my case, if you guys don't know this, I'm using this watch list. This is my favorite feature, and here's my watch list right now. When that summary score and MOS change, I get notified in the daily emails. So I'm letting Tykr monitor my stocks for me. This was like the biggest, one of my favorite features, the 4M as well with OpenAI. But this right here, I love it because I don't have to be looking at stocks every day. I can just let Tykr do the monitoring. So, all right. Next up, and I'm going to get to AppLovin, but I'm prioritizing some of your questions here. We're going to get to Tesla here in a second. So, do you personally ever buy stock that is not on sale? Do you currently own any stocks that you purchased that wasn't initially on sale? So, I typically, yeah, good question, Jeff. When I buy, I definitely like to prioritize on sale and a high 4N. That's a strong stock overall, but I do have situations where my stocks do turn, like looking at my screen here. I in my watch list, I simulated my portfolio So I can really keep an eye on everything in this screen here. You can see here's the stocks I hold in my portfolio. I've got Visa, which is a watch, Apple, which is overpriced. In this case, I'm not concerned with these four, Visa, Apple, Microsoft, and Google. The one dud, I'll be honest, in my portfolio is PayPal. It's the first stock I ever bought in the market. And this is one of those stocks where when COVID, it was the Omicron of 2021 in November. It was the rumors of Russia invading Ukraine, and then it was inflation rising. It was like a triple threat that caused payment tech you could say software platforms like PayPal, like Square, like SoFi, really to take a hit. PayPal got the worst beating of the bunch. And I told myself, rule one, I'm not selling this one for a loss. So I'm holding on for the long term. But yeah, you're going to run into circumstances where some stocks do flip. But if you have strong conviction of the stock, like you know the business model, know where it's going, like I can tell you right now, like the behavior of people around the globe and their usage of credit cards, that's not going away. So, okay, check that box. Apple, they've got great physical products, but get this, they do 100 billion a year in revenue off the Apple services, which is no hardware products, no cell phones, no computers. That's the App Store, that's Apple Pay. That's, I mean, high profit margin division, 100 billion a year. Microsoft, one of my favorite stocks, not my top performing stock, but you look at like Microsoft Office, you've got Dynamics, which is a huge ERP platform, just helping businesses run. You've got Windows operating system, you've got LinkedIn, you've got OpenAI. They got so many revenue streams, and one of their big plays, of course, is Office 365. You're never going to have a corporation say, "Hey, we should cut budgets, so let's get rid of PowerPoint and Office." So that's why I hold that one. As you can see here, Jeff, I look, I use Tykr, but I really make sure like, hey, if I'm not going to sell this, I better know this business inside and out. And then Alphabet, of course, big play there is advertising revenue, giving companies the power to add their credit card or multiple credit cards or debit cards and letting them control the spend is a brilliant business model. Back in the day, I think in the early 2000s, that wasn't as common. You had to call up, be like, hey, I want to add banners to your platform. What's the budget? It's just laborsome now. Get yourself out of the equation and just let businesses add their credit card. Huge business. So you can see there, I've got strong conviction of these I'm not selling. Now, I had a company, I'll keep this real quick and we're going to keep moving. Paylocity is a payment tech platform. This switched in the last year or so. You can see their history here, but their numbers were declining, and I decided to get out in the last year or two. I didn't have strong conviction. One thing that was a threat to me was a lot of competitors in the space. It was like, all right, I think market share is declining. The numbers are falling. I think it flipped to, or you can see here, these numbers are kind of dropping, like that 38 in the MOS. I was like, yeah, numbers are falling. I'm getting out while I can for a profit to move into something else. And I did the same thing with AMD. Semiconductor stock, I'd say they're probably second place to um, NVIDIA, but my conviction here was like, yeah, look at this. I think went to overpriced and I got out. Yeah, July of 23. I don't think that was the exact date, but it was somewhere in there. It still took off, as you can see, but it's been on the decline. Financials are not that strong. And I moved my profits from AMD over to NVIDIA. Reason is this is understanding businesses is NVIDIA's semiconductor chips are in so many different products. I'm like, that's the company that's doing something. You think of data centers is the big play there. With the growth of AI, where it's going, you need really fast chips, and NVIDIA seems to have the best of the best. So yeah, summarize that. Let's go back here. I'll keep it quick, but I will hold on to those if I got strong conviction. If I don't, and that summary score and MOS are falling along with that 4M, then get out, move to something that's got higher potential. Let's keep going here. Let's jump to AppLogin real quick. So I had a customer offline. This is a really good case study here. Few things to pay attention to. You can see like green across the board. And if you guys don't know, what I do here is like if I don't know much about the business, I'll go to details, I'll kind of read the description up top. They're really big on optimizing, or think of it like managing all your advertising online on different platforms in one clean location. And if you go here, their site, it gives you a little idea, but um, the solutions here, I was diving into this a little bit offline, and it's like you think about Google and Facebook, and it kind of puts everything in one central location. It's pretty slick. Now you look at the numbers here, it's like, wow, look at this. It's on sale, 79 score. The higher the score, if you're new to Tykr, higher the score, the safer the investment, and the higher the margin of safety, the higher potential returns you can make. And you need to get 50 or higher to get to on sale. If you're above 50, then your watch. Again, if you're above 50 on just one of them, it's watch. And then below 50 on both, then it's overpriced. And most stocks in the markets are overpriced. 4M in the middle, 84. Look at that. You go to the 7. This is the new feature we created. Look at this. Only about 20, give or take, 20 stocks in the market out of about 50,000 we have in Tykr today. Make it to this. The key points here is I touched on that summary score, margin of safety, 4M. 5-year returns, we like to find stocks that are beating the markets. A nice benchmark is 80%, give or take, is what the S&P 500 typically returns over 5 years. The EPS is increasing. I talked about that with Palantir. You want to see the profits increasing, and you want to see them beating those earnings estimates. So it's kind of checking all the boxes, but what the heck is going on here? Let's go to the 1 year. Look at this. They went from 510 down to 331. What in the world is happening here? So this customer came to me and started asking questions. So I did the same thing I did with Palantir. Are we experiencing legal issues, or are we losing customers? So I found an article here. Let's see if I can find this. Um, AppLogin. Here we go. So this is from investors.com, and they're talking about a site called Fuzzy Panda Research was saying some pretty harsh things about the company, which is now causing the stock to decline. Now, the CEO responded saying none of it's true. They're saying they're pretty much um, using scammy ads and just other techniques that are pretty scammy to advertise for their customers. And the CEO responded and said, hey, none of this is true. Then an analyst comes in, did a little homework, and backed up the CEO. It was like, yeah, we can't find anything wrong with the stock. There's no investigation from the SEC. That's a good sign. Like if you're investigated by the Security Exchange Commission, you got yourself a problem. So that's not going on. There's no legal issues going on. It's really just one blogger making a bad comment caused the stock to fall. So in this case, what would I do? Well, I would let the dust settle. And because I've seen this before, we saw it. Remember a few years ago, Mark Zuckerberg was in court over, was it privacy issues around Facebook? It was something along the lines. But anyway, he was in court, and I wasn't holding Meta at that time, but I was telling people that I'm like, of course, this is not financial advice, but in this case, let it settle, because what typically happens, keep this in mind, is you're going to have a legal issue. And then the next quarterly report happens, and it can like flush it away like it never happened. Like, for example, if you hit the next quarterly report and you go to financials here, and that EPS goes up even more and it beats the earnings estimate, it's like whatever happened in the past is now forgotten. This happens all the time with legal issues. So that's what I do. If you're a shareholder of AppLogin, if I were in your position, I'd be like, hey, I'm going to hold this out because these financials they're really good. And that 7, again, getting all 7 it's very, very difficult to achieve. So in this case, I won't freak out. Let's say you hit another good earnings report and this was way down. To me, that would be potential stockpiling opportunity. So just my 2 cents on AppLogin. All right. I want to keep going here. Pablo, such a cool tool. The seven, just discovered a few days ago. Thanks a lot. Yeah, you bet. We've been getting a lot of good feedback on that. I found, I'll keep this really quick, 15 seconds or less. I found over the years, I was looking at stocks with seven key steps, and I'm like, how do we automate this? The solution, there you go. Throw it into Tykr. And then if you guys haven't done this, go to the assets tab, then stocks. And I've got a filter set so you can actually filter by the seven. In fact, check this out. We got 53,000 stocks in Tykr today. This number changes every day because there's stocks filtering in and filtering out. In other words, going public and then going back to private every day. But let's go to the seven. Let's just go 5 to 7 because the goal is to get a five or higher. Just see what we get. Okay, so 1,000. Nice. And now let's change that to seven. I said 20 earlier. Okay, so 17 today. And you can see who's on the list. NVIDIA. Pretty solid. Yeah. So there you go. That's the seven. Glad you like it. I'll keep moving here. Jeff, you mentioned you were in the same position with PayPal. So as experiment, I sold off some for a loss and bought more Palantir and have already made more money than I lost. That's the play. Right. Some customers come to me and they'll say, what about opportunity cost, Sean? And that's a thing, which is you can hold for a long duration, or you could say, hey, what if I sell for a little bit of a loss, put it in something else, and the gains make up for the losses? That sounds like that's exactly what you did, Jeff. That's the play. In my case, I do have quite a bit of money in Palantir, so I'm sorry, in PayPal. So I'm not going to do that. But yeah, there have been circumstances where I was kind of flirting with profit, like I'm really close. I still have the discipline to wait till it's profitable. But man, that happened to be the case for both AMD and Paylocity. Just waited till it's just above profitable, sell it, move into something else. But if it goes on for years, it's like, shoulda, coulda, woulda. Should have sold out for a small loss and then moving into something else. So good. Thanks for bringing that up, Jeff. That's a good point. All right, so back to Andre, and then I want you guys, while I'm addressing Andre's next question here, any stocks you want us to look at next, we can dive in. All right, so Andre, you said, did you make back testing on Tykr? Where you back test if Tykr claimed strong buy? All right, yes, so that's on our roadmap. A few other people have talked about this. So back testing, so you know, this was inspired by, we got a few customers that are financial advisors, even a few individuals that work in corporate finance. And this was really inspiration from them and saying, hey, you want to show how Tykr has performed in the past. Pick a bundle, in this case, on sale stocks, 4M70, not 80. So we're just going to be a little conservative here. So 4M70 and large cap, how do they in general perform over the last few years? You can see here 5-year returns. S&P 500 is about 91, so it's better than that 80% benchmark, but it's usually around that. But look at that, 200% over 5 years on this bundle of stocks. Let's go here to watch stocks. So not as strong, but still pretty good. You can see 91 versus 177. Now, the next topic is something like this. Let's say, and one customer is like, you could call it a time machine. Is you get into your DeLorean, Back to the Future fans out there, get into your DeLorean, go back to, let's say, September of 2019 and pick on sale stocks at that moment. How did they then perform moving forward to the present? So that feature, as I described, is on a roadmap. It's not the biggest priority right now because we've got some cool stuff like broker connections coming really soon, real-time pricing, a bunch of other fun stuff. But the back testing, we're going to add some more stuff to it. So what you described there is in line with what a few other people are talking about. So good question. All right, I don't see any other stocks posted here, so I'm going to keep skimming through. Andre, thanks for the contributions today. If you got a larger investment sum, let's say a good example here is between 100 and 150K, and you had strong conviction of a stock, or you bet more on cost average. What I'll back up a second. Let's say you've got a sum of money of that size. I probably wouldn't go all in on one stock. I would kind of pick, and in the Tykr onboarding we teach this is try to be like 10 to 15 stocks. You don't want too many because then you're going to essentially create an ETF. And ETFs, this is really good to know if you guys are new to Tykr. You've got wealth building mode and wealth protection mode. Wealth building mode is all about finding about 10 to 15 stocks and then buying those stocks every month. Don't skip months, keep buying the same ones. When you move to wealth protection mode, then ETFs, index funds, mutual funds, essentially bundles of stocks are great. You're not going to see bigger returns, which is fine because you're in wealth protection mode. Now, keep this in mind. I've had a few friends that they like Tykr so much they'll pick another stock this week and then two more stocks this week and then three more next week and then they'll come to me and be like, Sean, I've got a portfolio of 30 to 40 stocks. I'm like, what do I do now? I'm like, yeah, you've got too many. Like you created your own index fund. You're essentially in wealth protection mode. You want to pare them down. So it is a self-discipline thing because you're going to see the shiny object, a lot of cool stocks and Tykr, but try to pick a few. Like in my case, I do see other stocks all the time that are probably better than where I'm at with my portfolio, but I have the conviction to keep buying a little more when the market pulls back. And if you're interested, the weekly trade ideas is for our premium plus and advanced plans. You can see what I'm doing or what I would be doing every week. And kind of my philosophy is I'll look at my stocks. Let's go to my watch list here. You can see what I'm talking about. I'll look at these, and over the last week or so, whatever stock is down the lowest, I get most excited about. It's like mini stockpiling events. So when there's those pullbacks, like check this out, 1 month return, I got a few here, aside from PayPal, but I'm seeing Microsoft and Google, they're still down. There's all these conversations about Microsoft and quantum computing. We could talk about that, but it's like, all right, I've got an opportunity here. So keep that in mind. And this is a quote from Phil Town that I love, which is we we're happy when the market goes up, but we get excited most when the market goes down. It's a paraphrased version of it, but it essentially means is like, great, you're making money, the market's going up, that's wonderful. And a lot of people, they really dwell on that, but you need to kind of train the mindset. And a few customers have come to me and kind of gotten there where they're like, Sean, the market's pulling back. This is great. And I'm like, that's where you want to be because that's Warren Buffett style investing, buying when the market goes down. So anyway, I want to keep touching on stocks you guys are thinking about. So Keith, you brought up TSM. Okay. Um, Andre, yeah, glad to help. Uh, we're going to touch on TSM here, Keith. I just skimmed. Mukesh, you got a good point here. Do you set maximum number of stock limit? Say if you find some good potential, would you sell other, keep under the limit? Kind of that 15 mark. Now, for context there is an article, of course, in that onboarding. And as long as we're in this territory, you've got the onboarding tips. You can also go to the calculations. The math is open source. What that means is you can see everything. You can add it to Excel, and you can go create your own version of Tykr. The SEC, I've had conversations with them. They really like that about Tykr because not too many people are transparent. But I still use Tykr because of all the automation, especially on that watch list. But there is an article, How Many Stocks Should You Own? And Warren Buffett has one of his comments is diversification makes very little sense for anyone who knows what they're doing. It's a protection against ignorance. Investing in the entire market is fine if you don't know how to analyze businesses. If you do know how to analyze businesses, it's crazy to own 50, 40, or even 30 stocks. So really alluding to try to go 30 or less. Ben Graham was Warren's mentor. He would recommend between 10 and 30 stocks. So at Tykr, we do recommend 10 to 15. And if you guys don't know this already, there's a really good blog post we got on here. How did Warren Buffett make his first money? Long story short, his first company was buying private businesses. They're not public stocks, but private stocks. And it was about 10 businesses or less, and then keep buying more. Of course, as he grew older, built up his wealth, that's when you move to wealth protection mode. So you're diversifying. I think Berkshire Hathaway, his company today, owns about 40 stocks, give or take. But still, you can see it's not like 100. It's still a relatively smaller size. So, all right, let's get to TSM here. Taiwan, I believe that's it. All right, right away, I do a quick glance at the seven. There's five of those on this first page. You've got the summary, score, MOS, 4M, and then the 5-year returns. I see a little pullback here happening. We'll talk about semiconductor stocks. This is a good example. And I'm not going to look at the seven yet because I'm doing a manual look. I do this all the time. I'll go to financials. Oh, look at that. Yeah, seeing a nice increase there. That's good. And then we go to earnings calendar and seeing them beating those estimates. Pretty solid. Last miss, look at that, was just -2% back in 2020. So that's pretty solid on the seven. Let's go to the seven, see what it says. So four, okay. Because we are not in the stock. You can see it's watched because the margin of safety is not, or the EPS is not increasing. It's not as steep as we would like. Let's do a side-by-side comparison so you guys can see what I'm talking about. We'll go to NVIDIA because they're a really good example of this. Look at this. We've got, we'll go to financials, EPS. This is the number one most important line on the financial statements, EPS. You want to see that increasing, a nice steep increase. This is increasing a little bit, so that's good, but check this out. This is very steep. That's what you want to see. The profits increasing like crazy. Doesn't mean Taiwan's a bad company. It just gives you perspective. But yeah, I'm looking at this stock here and other semiconductor stocks. Just a heads up now. And I'm glad you brought this up, Keith, which is what Trump is looking to do, or not looking to do, he has been doing, but it's been kind of retractive statements like he's backpedaling, which is the tariff negotiations. I remember vividly, I'm going to stop sharing here just to really emphasize this. I remember vividly in it was September of 2017 through March of 2018, heavy negotiations with China. Tech stocks really took a beating. The market went down, I think, like 15%. Tech stocks went down even further. And the ones that got hit the hardest were semiconductor stocks. And I was just holding on to the roller coaster, just riding it all the way down. And it was the discipline of saying, hey, I've never seen this before, but I'm going to hold. I know there's nothing wrong with the businesses I invest in, and I don't believe these negotiations are going to sustain forever, which I was right. And yeah, after 6 months, everything really took off again. My returns in 2018 were about 80% that year. And because I did buy when the market was pulling down. Now, what's cool about the market is it doesn't always repeat, but it does rhyme. And what that means is this event, like coming into this, I've been letting people know, hey, just brace yourself. We're going to see these negotiations. Tech stocks are going to take hits. Semiconductors are going to probably take a big hit. Don't freak out. It's not going to last forever. So I'm looking at this. And even over the last month, let's go here. What were we at? A high of about 210, got down to 189. That's not terrible based on some of the communication that was happening so far. Not too bad. Not nearly as bad as what we saw at Palantir. There are other reasons it's pulling back, but it's like, all right, this is all right. This is all right. And then we go back to NVIDIA. Let's take a look here. Go to the 1 month. Not as far down as Taiwan, but a little pullback. I see a high here, 140 down to 126. Okay, so the market might even be in a position where maybe it's listening to Tykr. I wish. We've got about 12,000 people on the platform as of early this year, but it's like they understand like we've been down this road before. Don't freak out. Whereas if I could imagine if we didn't experience what we did in 16 and 17 and we're coming into negotiations for the first time, yeah, these stocks probably would have pulled back further. So just brace yourself a little bit. You'll see a little volatility here as more negotiations continue, but overall, like Taiwan is pretty solid. I did mention we're going to create a watch list here, and I'm going to date it. So let's go to 27. We're going to add stocks to it. We're going to go tier. We'll go AppLogin. We'll go TSM. I know there was a mention of Tesla. We can try to take a look at that as well. And then we're going to rank these at the end. So TSM, let's get you on that list. Perfect. All right. Not to forget Tesla. Yeah. See the smiley face there, Andre. Yeah, good call. Yeah, let's take a look. So Tesla, see what we're looking at here. Okay, so their watch, we are seeing the profitability decrease. Stock is kind of all over the board. Before I jump to the 7 tab, let's keep going here. EPS. All right, so we are starting to move on the right path again, but you look in history, what did that look like? It's still not keeping up with a few years back. So to me, if I were a Tesla investor, I'd be a little alarmed. Now, I did warn people probably about 3, 4 years ago, the competition of EVs is just heating up. For example, Volkswagen is taking a lot of market share in Europe. You've got BYD. I was looking at, get this, the top 10 selling EVs in 2024, and BYD had 5 cars on that list, and I think Tesla had 2. And I was like, oh my gosh. And the thing is, the issue with Tesla investors, these BYD cars and a lot of other players, they're coming out with EVs that are cheap, like lower price. Like, yeah, I get it. People want to buy Tesla, but when push comes to shove, you're going to buy an EV and you're seeing the price tags. That moment, it's like sticker shock. Well, I could go with this other one, and it's an EV. It's $10,000 less. Well, there you go. So that's a risk. That's a risk for Tesla. Still cool products. But yeah, with the decreasing financials, that is a risk. I do see the 4M though, that tells us that the business model, because they've got the charging stations, they've got the solar panels. In fact, let's go to their site here. They have a nice site. I really liked what they did at the top. I love when companies do this. Just keep it simple. Like, what do you do? How do you make money? Okay. So here are the cars. Here are their energy products. Power, you got the power walls, again, the solar roofs, charging stations. I got excited about this about a year or two ago, but then I did some homework on what percentage of their revenue comes from charging stations, because they're going to make it compatible so other vehicles like, Ford and GM and the list goes on can use them, but it was like 7% at the time. And I'm like, oh, well, that doesn't get me too excited. If it was like 40, 50% or higher, then it becomes almost like a utility play where everybody uses Tesla's products. That's probably something, if I were a Tesla investor, I'd keep my eye on. But overall, yeah, let's go ahead, take a look at the 7. They got a 3. You want to be 5 or higher. So again, not financial advice, but if I were a Tesla investor, I would try to maybe ride up that stock a little bit. We see another rally here after tariff negotiations end. Let's go to the 1 year, see what that high was at. Yeah, it was at about 479, right about 302. Wow, that is quite a drop. My thoughts are I would probably hold it a little longer because it'll rally again, but I would, for the long term, do I have conviction on, Tesla stock over, the next coming years? And it's like, with all these EVs flooding the market, and keep this in mind too. I remember doing homework on Toyota. Toyota could be the leader with a solid state battery, which, if you guys didn't do homework on that, it could be like, we're talking 700 mile to 1,000 mile range, one charge. Other players like Honda are entering that mix, solid state lithium ion batteries. I was like, oh gosh, whoever hits the market first with those is going to start selling EVs like hotcakes. And Tesla's not going to go with the solid state. Elon has said they're going to use their own technology and try to optimize. Fine, to each their own, but what the solid state batteries could potentially do, it could be game changing. So yeah, that's my 2 cents on Tesla. Let's get that on that watch list. Thanks for bringing that one up. Robots. Yeah, I could talk about robots there, Andre. Another good point is um, Marquez Brownlee is a big YouTuber, does a lot of reviews. He's very good, a lot of reviews on tech, and he made a good point. A great robot, and I remember seeing this video like a year and a half, 2 years ago. A great robot is a dishwasher. It's ergonomically efficient because it's square, it's easier to manufacture, it fits in your kitchen, you can stack things on top of it, and it's moving parts, but it's not intrusive. The robots that Tesla, and I have to agree with him on that, they're not ergonomic. They're harder to manufacture because there's curvatures, there's shapes, and that takes a lot more time and money to make in manufacturing plants. And not to mention, you have spaces in your home that there could be stairs of different heights, which I happen to have in my home. Um, there's just things that the nuances and errors and issues you can run into are just astronomical. So I don't see physical robots like iRobot the movie. I don't see that becoming a thing. Cool, like to think about that's where the future is going, but it's like going back to the dishwasher comment. It's like that's a robot or a washing machine or a dryer. Like those are essentially robots doing things, but they're ergonomically efficient. They're easy to manufacture, flat edges, just the little details there. When you get in that manufacturing mindset, it's like, oh, okay, that does make a lot more sense. So just my 2 cents on robots. Um, I do need to scroll back up. I'm looking at Jeff. You brought up IRDM. We'll see if we can hit this one quick. Fortunately, with the 7, we can cruise through these pretty quick. IRDM, Iridium Communications. I don't think I've looked at this one before. Okay, I see a story here going on with this stock. All right, so we got an on sale stock. So 62, that's good. It's above 50. The 80% tells us the EPS is probably looking pretty good. We'll look at that. 4M though in the middle, it's getting close to that 59. And then the chart here is only a 9% return. And it looks like if I roll over here, it was July of 23, it looked like a sharp decline. So we're going to try to figure out what happened. It was July of 23. So let's go to the financials. Let's take a look. Okay, June of 23. Look at that. That could be it. You go from profitability to a massive decline, losing a lot of money that could have caused institutions to sell off. This is a good point to drill into for you guys is stocks move up and down the most in the market based on two main criteria. One is the EPS increasing or decreasing? If it's increasing in most cases, not all cases, but in most, share prices go up. And if it decreases in most cases, but not all, it does go down. The other thing in combination with that is it beating those earnings estimates. So going back to 23, yeah, look at that. Oh my gosh. Yep, there's our culprit. You miss by negative 759%. And your EPS is declining. That's that drop off back then. Okay. But now moving forward, we are seeing better estimates. That's a good sign. And then jumping back here, it's moving in the right direction. Very interesting. I got to take a peek here, see what we're looking at. Um, Provides mobile voice and data communications for businesses, United States and international governments. This ties back to Palantir's government contracts. It's kind of like they can be a customer for life because they don't like to make a lot of switches when they're working with somebody. It's not like businesses. You'll see this with small businesses and small business owners. They'll pick a product, use it for a few months, and then switch to something else. Big business, because there's so much more money involved, they're committing to software for 3, 7, 10 years or beyond. So do keep that in mind. So interesting product. I want to just jump to the website here. Maybe and I'm always looking for like a products and services page. This is cool, markets, and I love the little photos. Gives us a really good idea of what they do. A lot of different industries. That's pretty cool. Huh. All right. Let's go to the seven, see what we got. We got a four, not the five we're looking for, but maybe looking at the two most important lines there over, at those earnings statements, it's moving in the right direction. So I would keep my eye on this one. Let's go ahead, add it to our watch list. Might be breaking out. If you start to see, if anybody watching here, you start to see, let's say we go 0.31, what is our highest? Yeah, 0.31 a few quarters back. If you see that go to like zero point 0.4, 40 cents, 50 cents, that you see a jump like that, that's when institutions could really start piling in and that stock could start taking off again. So, but we know what happened here. So you guys know I love using Tykr. I'll go right there at those steep drop-offs, or if it's a steep incline, I immediately go to that financials tab or that earnings tab. See what happened at that date. Usually give you a good idea. If it's not that, then that's when you want to look at history and be like, hey, was this a legal issue or something like that? Good stuff, guys. Really, really good stocks. We're going to do a roll up here. Um, What about ASML? What about Trump pushing up the import charges? I mentioned that a little bit, Dunker. Thanks for bringing that up. That's all related to the tariff negotiations. Don't be too concerned. Let the tide settle. But again, 2016 to 17, that was a 6 month duration. I foresee about a 3 month duration this time because the market, we've been here before. Cool. All right, we're at the top of the hour here. Let's do the roll up. I want to go to that, and then I'm gonna give you guys news on what's coming soon, and then we'll close out. So we'll go to watch lists here. Whoop, here we go. So looking at the list from, in my opinion, strongest to weakest long term, I'm gonna just sort this by seven, see what we get here. So let's go 4M, see what kind of ranking we get. Number one at the top of the list, though, I do have to say Palantir. I hold it, so I have strong conviction of the stock. Um, this Iridium caught my attention. Potentially hidden gem, maybe number two. It's close between that and Taiwan, I would say. Then I would go AppLovin, and I would go Tesla's fifth place. So just to kind of reiterate, probably Palantir, Iridium, nice find there. That again, it might have something. Boring business, but Warren Buffett teaches us go for those boring businesses. So Iridium is two, three is Taiwan, four is AppLovin, Tesla. Gosh, popular brand, but the threat out there is just so high with the competition. All right, and then a heads up here. I mentioned the broker connections is coming soon. We will be running a special here very soon because that feature could come out the next 2, 3 months as a goal. We're going to see discounts for the Premium Plus and Advanced plans. And of course, friends tell friends about software they love. So we'd love if you share this with your friends, introduce them, let them know, hey, you can test drive Tykr for free. Get in there, use the tool. My favorite feature, of course, is that watch list. Let the tool do the work for you. Let it notify you. You kind of set back and go enjoy life. So yeah, overall, really good questions, guys. Love the interaction. I hope this gives a little peace of mind with some of the stocks you're paying attention to most, including Palantir. And please go to the tab on Tykr that's webinars and check out our next ones. I'd love to see you guys join the next webinar. I'm trying to do some kind of webinar every week. So thanks again, and we will talk to you soon. See ya.